What's up, traders? In today's video, we're going to do a recap as to today's price action, what trades I took and how they panned out. Also got a lot of new subscribers today, so to all you that are new, welcome and stick around. What is up, everybody? My name is Heath and this is Trade Talk. Now, last night or yesterday's video that mysteriously got uploaded today because I accidentally uploaded the wrong video, apologies for that. I said that I was going to be watching this pair closely because last night we closed this candle right here. This is a daily candle from yesterday's price action. You can see we traded way below this market structure low and this market structure low. However, we did not close the daily below these two candles right here. And always remember, guys, the candle body offers more support and resistance than the wick. The wick just shows you where price went in that daily range. Now, wicks do hold resistance and support. Now, I'm not saying that they don't. What I'm saying is the bodies hold more resistance and or support. As you can see with this daily close, we penetrated all the way down to this high of this last down close candle before the bullish push. If I lay my crosshair on the high of that down close candle, this down close candle right here, now this is a daily time frame, you can see that yesterday came all the way down and touched that perfectly and retraced. Okay, now supply and demand traders would call this a demand zone because it's below current price. Anything above current price is considered a supply zone. I do not trade like that. I am a candles guy. I love candles. I focus on them. I have studied them for years and years and years. Candles are the real indicators in price. Now, this down close candle is substantial. I do not know why. I cannot give you an explanation as to what happens here. What I can see on the chart basically is obviously people took profits here and then short sellers were selling it here because you can see this candle's high or close and this candle's open. If I put it up there, you can see it almost ticked that area and you had a little bit of selling pressure. However, it was bought back up. So there was some action here, some capital rotation, I guess, on a small scale just for this pair. Now, anyways, last night I said that if we close this daily candle back above these candles open and close here, the bodies of these two candles, then I would be looking for a long trade and I would be targeting this high, which is yesterday's high. Now, this green line delineates the position I took, and this red line delineates my take profit. I had a question in the comment section today from a new trader, or a new guest from, I guess he came from CTM, asking me, do I take profits ahead of these support and resistance areas? The answer is yes, I do. I trade in the direction of the liquidity purge. I take 2/3 of my position off before the liquidity purge. I literally drop 2 pips below the high or whatever area I'm aiming at to take 2/3 of the position off, and then I move my stop to break even. So that way, when the market purges that liquidity, if that liquidity gets sold into and it comes lower, I still got out of the trade with a profitable trade with 2/3 of the position size. Excuse me. Some people say that by taking 2/3 of the position size off, I am taking too much off. I will get back to this chart. I'm just going to meander away for just a second. Please bear with me. I want to go over this real quick. Now, I got long this, okay? And I took 2/3 of the position off before we broke this high here. So I got long in here around this area, took 2/3 of the position size off right there, left 1/3 of the position size on, set the stop to break even. This continuation has already paid me more than the initial take profit. Now, I took this trade ahead of this level. I seen bullish continuation going up, and I felt as if though we were going to take out this market. Well, we took out the market structure, but I was thinking that we were going to purge the liquidity on this side of these highs here, the top of the range. And I know that if we purge that liquidity and we get continuation, the move can be huge because you're stopping out a lot of people, and breakout traders are jumping in, and you get just solid continuation of a trend. And also, at the beginning, when I first started putting out these videos, I said in this consolidation here, we've been in consolidation since July the 27th. If we break out of this consolidation, there is a big chance that we can have a move just like this one once we broke out of this consolidation. You see what I'm saying? Once we broke out of the consolidation, we had several days in a row of up move. Now, I don't expect that, but I will damn sure take it if it wants to give it to me. So when I take 2/3 of the position size off ahead of this level, the 1/3 position size that I still have on in this trade is actually in more profit than the initial 2/3 profit target objective that was reached. So I'm not doing anything wrong. I do this for a reason. If the market wants to purge that liquidity and then sell into all those, or sell back into the market to create continuation to the downside, and it stops me out, that's fine with me. I mean, it's just that simple. So this is the reason why I shed 2/3 of the position. That's why. So back over here to Aussie Swiss. Yesterday, I said if we did this, we closed this candle above this white line, then I was going to be looking long, targeting this high. Let's drop down to a 15-minute chart. So this morning, this is the Asian session, and we traded down, taking out these stops, and then we moved higher. Okay, we moved higher, and we took out this market structure high, delineated by the top of this green candle here, the body, and the body of this bearish candle. We took that out, traded down, back up. So when the market decided to pull back, I told everybody I was going to look to get long this pair. However, I want to see if it's first going to run the liquidity below the low of this candle. And it did, right there. Now, on an hourly time frame, I was looking at this. I was looking at the body of these two candles, and I told everybody to wait until 9 a.m. because that would be the closure of the 8-hour candle, as well as the New York Open. So if basically what I said is, because we closed this candle lower, and I said I didn't really like it as much anymore because this candle has closed lower than these two candles. So there's a pretty good chance price is going to continue lower, or if we get a big bullish candle pushing back out, I will get long on a retest of that area. And that's what we got with the very next candle. So I got long right here on this candle and put my stop literally like 10 pips away. And you can see price was doing really good up until when it came into this area. I actually thought it was going to work out, but it didn't. So I am probably going to exit this trade, because what we have here is an inside day. This is an inside day. You see the high of this candle and the low of this candle. This candle, this is today's candle, the entire range fits within this candle's range. That, by definition, is an inside day. Inside days are killers to intraday scalping opportunities, because when you're looking for the intraday scalping opportunity, you're looking for range expansion. When you have an inside day, that is not range expansion, that's range depression. The range has gotten smaller. So, and it looks like we're trying to go lower, because this candle, this daily candle, did close today below this white line. So I'm almost 100% sure this trade is scrapped. Now, I am still in profit. However, what I'm going to do is I'm going to take half of the position size off, and I'm going to move my stop to break even. That way, if price trades down and stops me out, that's okay. It's a break even trade. I lost nothing. I made nothing. However, if price turns around here and moves up, I'm still in the trade. But I'm feeling quite confident that it's probably going to stop me out. So if you took this trade based on what I said, I do recommend you never do that, because this is not financial advice. This is just my opinion, and it's supposed to be entertainment. But if you did, that is what I'm going to do. Now, moving on. We already looked at Euro USD. It's going straight up to the moon. Aussie yen, basically we broke out of this consolidation here, and you can see with this big strong daily closing candle, and we did have a pullback today. This is still looking okay. When does it no longer look okay for bullish entries to the upside? When we close a daily candle below this market structure right here, delineated by this white line. If we close a daily below that, now we can trade down into it. We can trade all the way down to here. As long as we close a daily back above that line, I'm going to look for long opportunities. Targeting this line. This line is the high of this candle. So any short traders that got short here that still have their stops residing above this high, that by default makes them willing buyers at a higher price. This is why I look to target these areas, because I know for 100% certainty that there are willing buyers at a higher price right above this level. And I would love to get long somewhere in here to sell my position to these willing buyers. You see what I'm saying? That's the whole purpose in the scalping method, is to look for intraday expansions of the daily candle expansion, and a breakout possibly through an old resistance where we know for sure there's old buy stops up here, or buy orders in the form of a limit order that makes them a willing buyer. And I would love to sell to those willing buyers. Whenever I have willing sellers or willing buyers at a higher price, willing sellers at a lower price, I love to capitalize on that. There's not many places in this world where you can offload something you own at a higher price simply because there are willing buyers sitting there at a higher price. So that's how I look to trade. Going forward on this pair, like I said, we get a daily closure below this market structure high, which is the body of these two candles. Then we have entered back into the range, and we have to wait for price discovery to play out. When price is trading in a range, you have price discovery, and it's very hard to gauge the levels. I mean, you can, but it's difficult. This is just to get new traders started, just to give them something to look at and start to study. NZDN doing the same thing. It broke out as well, and it's having a pullback. Same thing. When do I look to no longer enter this thing long or look for buying opportunities is when we close a daily candle below these two candles here. We close down in this area here. I am no longer looking for buy entries on this until we have a deeper correction, possibly down to here. USD CAD. USD CAD has had continuation. We took this trade, had the profit target reached, 2/3 of the position off, trade is running. I am no longer in this trade, but it was discussed earlier on into the week, I think on the weekly look ahead. So if you're in this trade, good job. It's going lower. Where are we going to start looking for possible areas for USD CAD to turn around? Well, we're kind of in one. I mean, this red line is price right now, and we are penetrated this market structure here. We're inside of it, and it's a good market structure. If I move this purple line down, you can see that we caught the body here, 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 here. We caught the body here, but as retesting support, and then a move higher. So this purple line right here, this is market structure, and on a monthly candle, there probably will be some pullbacks into this area. Now, if we push back up into that area in the next week or so, and we hold below this area, that would be an intraday opportunity for a push down to purge the stops on the buy orders or on the long traders. Pound dollar. Pound dollar is doing the same thing. Well, no, it isn't actually. Look at this. This is phenomenal. We pushed up through this high, purged the liquidity, and now we have closed a daily candle back below this. So this isn't as strong as Euro is. By this daily candle closing back below this level, this delineates a little bit of weakness. So I'm not really going to be looking for this to, I mean, there's liquidity resting above this high now from short sellers. There's buy stops up here or buy orders. However, with this weakness coming in, we may be going to get a deeper correction. So I will be watching the bodies of these two candles here to see if we close a daily below there. If we do, we're probably going to test this area here because that's the bodies of these two candles. So in summary, if we push down, if we keep pushing down, we're probably going to test this area. If we get a support hold here, this would be an area to look for possible long entries. If we get a daily closure below this level, we are going to be looking for price to push on further down into this level and then possibly test it for support. But we have to wait to see if support holds. Bitcoin is in a range, but well, it's not in a range. I mean, it's in a bull market, but since we made this sell-off on Thanksgiving, we have pushed back up, closed a daily below or above this market structure right here, delineated by the candle bodies. Guys, we always delineate market structure by the bodies of the candles for the newer members. A test of this area here and a hold on, like I said, you can get a push down, you can get a wick, but a hold like this candle, you push down, but you close back above. Not only did you close back above, you closed back above green, which means that's more buying pressure than selling pressure. So if we push back down to this white line here, that's 19,185 on the Coinbase data feed, look for possible support hold. If not, go lower, 18,777. That's how you do this, guys. Daily candles bodies offer areas to look for support holds or resistance holds. S&P 500. Now this thing is, I mean, it's bullish, guys. It's bullish. If you're trying to short this, you're the kind of person I love to trade with. Just saying. As you can see, okay, so the next liquidity zone is definitely going to be above this ascending trend line and this high, yesterday's high, which I'm not sure if it's a new market yet or not. No, I think that's at 8. So this is yesterday's high. So that's an area of liquidity. Everybody got short up here. Everybody. All the traders always looking to catch the top of the market. So we'll sell our position to them. Look for a retest down to here because this candle closed up within the range. So I wouldn't be surprised if price pushes down below this candle's. Let me stretch this out. I'm sorry, guys. I keep forgetting. It's harder for you guys to see on mobile. If we do a retest below the low of this candle, that's okay. We'll probably test this price here. So let me delineate that by a line. And if we do, and we hold, on an hourly closing basis, you can look for long opportunities targeting 36.83. That's what I'm looking for. Gold caught a bid down here right where we said it would. Right where I said it would. In December, gold likes to catch a bid. I don't know what it is about that. We closed another daily candle today above another market structure, guys. This is turning to be bullish. You have this market structure broken with a daily closure, and now you have this market structure broken with a daily closure. Now this is a price swing. It's a small swing, you know what I mean, because it comes down, back up, and then bounce down. But it is a price swing. Therefore, that delineates market structure on a lower time frame. I'll show you real quick. Right here is that market structure. Right there. Go back to a daily. You can see that today we closed above this market structure here. So we have to wait to see what's going to happen with this price. So at least use an 8-hour chart to decide if we get a closure, the Asian session. If we push down in here and close above, there's a higher possibility that gold is moving on to test possibly this market structure here. Yeah. So, I mean, it will find some resistance at this wick, obviously, because you can see this wick. Anywhere a line catches a bunch of wicks, perfect touches like that, that is a strong area. So you can leave that there. Just simply go grab another one and create your new market structure line. So look for prices to retrace and then get some closures up above here. And then ultimately, you just keep following the market structure up. That's how you do it, guys. ZRX never did come back down and stop me out. I said if we got a daily closure. Oh, wait, no, it was an 8-hour closure, I believe. Yes, down here. These lows here I was looking at, or this market structure. I said if we get an 8-hour closure below here, I'm going to exit the trade. We pushed down into it, but we have since traded back above it, so I'm still holding on to that. So that's pretty much all I have for you guys tonight. So thank you guys for showing up. Thank you for being here. Thanks for all the love. Please like and subscribe, and I'll talk to you next time.